A check on the crude first, and the initial euphoria over Greece's elections results have faded. The country voted the Conservatives to the power, assuring that Athens stays in the Eurozone. The Brent crude prices jumped over a percentage point in the news in the Asian trade, but prices have pulled back since then as Europe shifts focus to the crisis in Spain. The Brent crude prices currently holding around 0.5% on the lower side. That's the ditto case for the NYMEX crude prices as well. Both those have declined in the trade right now. The gold prices have continued to remain subdued. The Greek election result dented the appetite for gold in the morning, and prices are holding around that $16 per ounce mark in the markets at this point in time. We have seen a decline come in the Indian prices as well. For the strategies in all of these commodities, we are now joined by Hitesh Jain. He's analyst commodities at IFL, and Vijay Bambani is author and CEO BSPLindia.com, and both of them join us in our Mumbai studios. Hitesh, hi, welcome to the show. Let me start with you. And how do you look at the crude prices? I mean, we started Asia quite on a euphoria, but Europe really saw a decline.
As you rightly said, that the recent developments on the Greece political front has actually mitigated the immediate concern of Greece exit. But the broader concerns still persist, because taking into consideration, if you analyze the bond markets in Europe, the Spanish long-term bond yield, that is 10-year bond yields, are still soaring. The yields are soaring about 7%. Talking about Italy, they are still about 6%. In spite of the recent development where the European finance minister agreed for a €100 billion rescue fund, the bond markets are not reacting positively in that respect. So the broader concerns definitely persist. In the short term, you may actually initiate a short strategy on gold. But in the longer term, I think the uncertainty still prevails, and it is a perfect recipe for gold prices to move higher. Talking about the intraday idea, I think we can sell gold at about at 3,200 with a target of 29,900 and a stop loss of 33.70.
You're selling into gold, Hitesh, but what are you doing in case of crude prices? Because that is something that has been very, very choppy.
Right. See, crude oil prices are not sustainable. We saw a moderate upside, but taking into consideration the economic development on the both sides of the Atlantic, talk about US or Europe, it is not rosy. Talk about China, the picture is not gung-ho itself. So I think the upside is not sustainable, and the strategy initiated would be always sell on the rise. In that respect, I think we would initiate a short strategy, and the strategy would be like on an intraday basis would be sell crude at 4,700 with a target of 4,600 and a stop loss of 4,760.
All right, so a bit of a weakness coming in case of crude prices. But Vijay, while crude continues to be on the lower side, how is natural gas prices looking on the charts?
Manisha, natural gas has been showing signs of relative strength where crude is concerned. And the 121 levels where it's bounced off from last week, that's a Fibonacci support level. I think that is likely to stay in place, and I would actually go out and start accumulating natural gas at 137 odd levels and hold that long position with a stop loss at 134 or even 133. I would expect to book profits above 141 levels. So I would be a buyer on decline, not necessarily at the current price, but I would give it about 3 to 4 rupees lower levels from here before I start buying.
Hitesh, you did give a sell call on crude and on gold as well, but how about silver? Because that, of course, has been choppy. We've seen $29 continue as a resistance in the international markets. How are you trading the Indian markets today?
See, silver being a precious metal definitely takes a cue from the leader of the precious metal complex. It is also an industrial metal where it will take a cue from the weakness, overall broad-based weakness in the base metal complex as well. In that respect, we also have a short call on silver. The strategy goes like you can sell silver July contract at 54,550, the target of 54,000 and a stop loss of 54,900.
Vijay, how is the base metal sector looking to you? Because while there have been some supportive statements coming in from China that the growth or the concerns really may bottom out in this quarter and the next quarter could really look positive, do you think all those statements would be supportive?
In the absolute near term, they might just provide a blip up on certain counters. But overall, they are in a consolidating band. There is neither a breakout at the upsides, nor is there a drawdown or a decline below support level. So most of these metals are range bound with a slight tint of a negative bias. But there are pockets of strength here, and I would look at lead mini futures. I'm specifying mini because I'm not really convinced that traders should enhance their exposure levels at this present kind of market. I would buy the June mini futures in lead at 106 and a quarter. I would hold that long position with a stop loss at 105 and a half. I would expect to book profits closer to 107, 107 and a half. And only above the 108 levels should it sustain would I advocate taking exposure in the regular lots.
All right. So sell call coming in for lead. But Hitesh, how do you look at the whole sector? Because while we've seen the Greek elections pass on, the G7 also is done. What the market's really looking forward to now are the FOMC and the G20. What kind of cues do you think base metal sectors could get from that?
Regarding the EU summit, where they're anticipated to talk on the long-term financing operations, it was the Greece euphoria may lead to a moderate upside, but I will not buy into rally. Because talking about lead itself, where you consider the intrinsic fundamentals, things are not inspiring itself. They look listless. Especially considering the major component of demand comes from the automobile sector. You talk about Chinese automobile sales number, talk about European numbers, they are not rosy in fact. So I would prefer to sell in the near-term basis as well as in the medium-term basis. My intraday strategy would go as sell MCX-led June contract at 107, the target of 105.5, and a stop loss of 108.10.
Hitesh, also, what kind of cues would you take for the rest of this week now? Because, you know, FOMC is something markets are expecting a QE3. If not a QE3, perhaps maybe a hint of it. So looking at that, do you think there could be some support, or would you go with a cautious, jittery move into that?
See, Fed has not actually categorically specified regarding quantitative easing. They are playing with words, more of a lip service, where they're talking about weak. We still have the measures on the table, but we'll take when it is required. But if you consider the recent flow of numbers on the economic front, on the macroeconomic front, I think US is clearly stagnating. Now Europe is actually technically into recession. And China also not doing well. If you see a lot of numbers in terms of GDP, industrial production, if you compare with year-on-year figures, they are not rosy. So all things don't bode well for the commodity complex in terms of industrial commodities. You may consider base metals or energy. But in the precious metal, I think in the longer perspective, it is the best bet. Because as I mentioned, uncertainty is the best recipe.
Especially for gold, the leader, as you pointed out. Hitesh, thank you so much for joining us. So those are the cues coming in from IIFL, selling into most of those commodities, whether it's crude, gold, silver and lead in the intraday markets. But going forward, precious metals is something that they are quite bullish on.